Hello, my name is Maria Besubova and you're at my channel Fertilizers Jazz. Here we talk about events, trends, technologies in the world of fertilizers and agriculture. Please subscribe to the channel, put like to this video, and let's jazz! Today is March 31 and this is a weekly markets update. Let's have a look at the news of week 13 and see what are the next trends. Please check out my interview with Nikita Levine, Business Development Director at Atom. That was published last Wednesday. Nikita shared his insights regarding green fertilizers market perspectives and also uncovered details of Atom's incredible project of green CIN production in Paraguay. So don't miss the jazz. Of course, the main news, not only in the urea market, but generally in nitrogen, was long-awaited Indian urea purchase tender announcement. The tender will be closed on April 8. IPL is seeking for total 1.5 million tons, split almost equally between East and West Coast. But the most important part is the shipping window, which is extra long, until mid-June. What does that mean for the market, and what can be the results of the tender? First of all, as expected, tender gave immediate support to the slipping global prices. And we will see the effect in a week or two more, when prices will rebound across the globe. Egyptian producers started last week with sales at the level of around $360 FOB, but after announcement, the sales at $370 FOB was already registered. However, the question is how significant this support will be. Taking into account a very long shipping window, it will not help removing all long positions, especially from the Middle East. So, looks like global price rebounding will be limited. Second, shipping until mid-June means that tons will arrive when application season already starts. So, India needs to be sure that there will be no hiccup in supplies inland, which might lead to the significant volume purchased. Total volume perhaps will be at least 1.5 million tons, or even more, if suppliers are eager to propose more. Regarding potential L1 price, of course, it is a gamble as always, and it is very difficult to say now, as many changes might happen during a week before tender closes. However, looking at the situation now, today, I would make a stake at price around mid-170s CFR West Coast. Please let me know in the comments your guess, and let's re-vote next week, just before the tender closure. Among other news, Nigerian Dangote sold two 30,000 tons lots, price heard in mid-$340s FOB. Prices in Baltics for both granular and prilled product dropped at the beginning of the week, amid significant price dip in Latin American markets, but after tender announcement rebounded to $345 FOB for both grades. Activity in the Black Sea was still absent. European demand activated after Egyptian prices dipped at the beginning of last week. Also, the refill wave will emerge very soon, so buyers stepped in the market and will purchase during next week or two. Spot prices in the Middle East also dropped sharply at the beginning of the week, with unconfirmed deals happening at price as low as $350 FOB. But on Friday, market found stability, and producers will now feel relaxed with several outlets available through June. In Iran, activity was minimal due to Nowruz holidays. In Indonesia, Kaltim closed the tender for 45,000 tons of granular product sold at $378 FOB for loading in April. In Malaysia, Petronas stopped its plant for about 2 weeks due to unplanned maintenance. In the US, prices reacted at the tender announcement by $10 uptick on FOB. Due to long shipping window, there will be no direct competition for volumes with Indian tender, but traders might hold some tons in April for India instead of sending them to the US. And larger corn acreage, together with concerns regarding Chinese-built vessels' tariffs, might add tightness to the supply in April. In Brazil, prices on Friday reached level of $360 CFR after the drop at the beginning of the week. But in general, the demand remains slow. In Mexico, there was some trading activity happening last week. Tepeyac was looking for a cargo of 30 to 35,000 tons of granular urea with arrival until mid-May. Several cargoes for 45,000 tons were sold in mid-380s CFR. Paper values at the end of the week reacted at the Indian tender announcement, but not for all benchmarks. Egypt FOB future price deterioration for April stopped, and May price corrected upwards by $3. NOLA reaction was even more positive, with April price increasing by $10 and May price remaining stable. June price at NOLA is expected to drop sharply to the average $330 level. At the same time, Arab Gulf FOB future price for April decreased by $7 more, and for May by additional $5. Brazil CFR also dropped by $5 for April and $8 for May. In ammonium sulfate, market bearish sentiment continued for another week. Prices in China have fallen due to weak demand from export markets and were around $138 to $40 FOB for standard product. A sales tender by Tianqin for 15,000 tons for first half May shipment closed at this level. Another producer, Haisan, closed a tender for full May shipment at around $40 FOB level. Demand from Southeast Asia and India is also weak, as prices had gone up significantly in the first half of Q1 this year. Indian importer is looking for 25 to 30,000 tons of standard product, but seems like his bids are far lower from potential offers. In Brazil, there is no demand for AS due to the off-season. In Mexico, anti-dumping investigations are on against sulfate of Chinese and US origin, so the market is muted there too. In Turkey, an oversupply of sulfate is registered because country had bought multiple shipments from China earlier in the year. So now importers are looking to re-export the surplus. In the US, inland prices decreased due to drop in NOLA values. At the same time, distributors are moving tons quickly from the port warehouses, so another round of import activity has to emerge in a week or two that may push prices up. Demand for nitrates in the UK and Europe is still slow. Farmers are busy with application. UK distributors continued to face massive pressure trying to meet delivery targets because of logistical challenges. Prices were under downward pressure due to weak urea and softer demand. There is an expectation that AN prices will come down by 20–30 euros at least in April. Already CAN prices have fallen in Italy, Germany and the Baltics. In the Baltic non-Russian ports, offer prices have come down to 325 euros FCA, while in Germany CAN was sold at 340 euros CPT. In Italy too, CAN prices have come down. Egyptian NCIC sold 12,000 tons of CAN in its latest tender at $300 to $305 FOB for April loading. On the production side, Achema in Lithuania has announced it will suspend production of ammonia from May 15 and through the entire Q2 due to European natural gas price fluctuations and cheap fertilizer imports from Africa and Russia. SKW Phosphates is operating at reduced minimum capacity on both ammonia lines for now. UAN prices in Europe were stable even on the background of bearish sentiment in urea, amid steady demand and tight supply at least until mid-April. In the US, prices continued growing due to healthy demand and persisting supply problems. NOLA FOB price increased by almost $3 to $310 level. Inland values also demonstrated an uptick. In terms of supply, Koch continues having problems at its Weaver plant, and on top of that, its plant in Nebraska also stopped on Wednesday. LSB UAN unit in Oklahoma also stopped in the middle of last week, so prompt availability will remain very limited in short term. Application has already started in the southern states, so it will make supply even more bounded. In ammonia market, the bearish sentiment continued to weigh on prices. The news of the week was April price settlement at Tampa between Urea and Mosaic, which showed $25 drop versus March price. It will lead to further price level deterioration across the globe. In the US, the FOB NOLA price dropped by $20 to $384. New contract Tampa price will drag prices further down in the short term. Domestic US prices remained mostly steady, with demand still active for the last week or maximum 2 for current application season. Activity in the Middle East was slow and prices corrected downwards by another $5. Iranian supply that came back to the export market will weigh more on prices. In India, FACT closed its tender, but prices are not available for now. In northwestern Europe, prices dropped by $30 as a result of increasing supply length in key producing regions. Falling import prices will put additional pressure at domestic producers and likely will result in production curtailments. Phosphates market is impacted by rising prices for sulfur. Coromandel International has agreed phosphoric acid contract prices for Q2 deliveries with Jordan's JPMC at $1,153 CFR with 30 days credit. This is an increase of almost $100 per ton from Q1 price. Such a big increase is a result of the rise in sulfur prices, as well as of the fact that there seem to be availability issues in India. Egyptian NCSC has reported sales of DAP in its tender at $647 to $50 FOB level for April loading for shipment to India. Ethiopian ABC closed its tender on Wednesday, seeking 465,000 tons of DAP to be shipped during April-May. The previous tender was scrapped after ABC received proposals in range of $640 to $70 FOB. Now, the offers were in the range between $150 to $190 FOB. So, let's see how the nomination will go. India was active in the DAP market, buying a Saudi cargo in the mid-high $640s CFR, down from recent sales. It is estimated that with the new cost of DAP production, with new phosphoric acid price, is just over $640 per ton. There was also a tender announced by NFL, which is seeking 100,000 tons of DAP. Tender closes on April 11. This should provide further direction in the market. The Indian government is considering to increase the nutrient-based subsidy for DAP for March-September Kharif season by 6,000 rupees per ton. However, the disbalance between the subsidy and the maximum retail price will remain. And with the bullish trend in phosphates, the importers will continue to lose money. Chinese FOB price for DAP firmed a bit to $630 to $35, but there is still no information about exports restart. Activity in Europe was very slow, with prices being mostly stable across the markets. In Brazil, MAP prices have firmed more, and now product cannot be found below $660 CFR. Product availability is an issue. However, demand has weakened as barter rates worsened significantly with such high phosphate price and slipping crops prices. In the US, prices for DAP increased by $5 per short ton to the level of $615 to $19 FOB NOLA. But most of the efforts are focused at product shipment to the retailers. There was no change in MAP and TSP price level. This price increase for DAP supports the idea of growing demand amid higher corn acreage. However, if phosphate price continues to grow, then affordability might become an issue and weigh on demand further during the season. Moving to the fundamentals. European natural gas futures fluctuated around 41 euros per megawatt hour as the heating season nears its end and traders shift focus to stockpiling for next winter. Mild weather, also expected next week, could slow storage withdrawals and allow early injections, easing supply concerns. Earlier this year, fears over rapid drawdowns widened the spread between summer and winter contracts, making off-season purchases less attractive. However, the gap has narrowed recently, suggesting storage sites may reach required levels without intervention. Meanwhile, EU storage levels remain below 34%, keeping supply risks in focus. US natural gas futures hovered around $4 per MMBtu as record production and mild weather weighed on prices. Forecasts indicate above normal temperatures across the whole US through April 9, likely curbing heating demand and enabling storage builds. Analysts predict March could see the first net inventory increase for this month since 2012. Meanwhile, gas output in March surpassed February's record. On the export front, LNG flows have risen slightly, driven by new capacity at Global's Plaquemines LNG plant in Louisiana. Agricultural commodities future prices for wheat and corn were in red, while soybeans slightly increased. Wheat futures dropped by 30 cents over the week and traded below $5.3 per bushel on Friday. Key factors weighing on prices were potential agreement between Ukraine and Russia to ensure safe navigation in the Black Sea, which may pave the way for more secure wheat exports, and also improved weather forecasts in key Black Sea growing areas. However, drought conditions in the US plains remain a concern, despite some rains that started last week. Meanwhile, traders awaited the USDA's grain stocks and planting report that will be issued today, which will provide insight into 2025 planting intentions, along with the start of reciprocal tariffs on April 2. Corn futures also dropped amid market anticipation of historically high acreage for upcoming season. That will be clear after USDA report publishing today. Once the dust settles, attention will turn back to South America and Brazilian production as the safrinha crop continues to develop. Temperatures in Brazil remain and are forecast to stay above average. Precipitation is needed, and weather forecast shows that regular runs of rain are expected over the next couple of weeks, improving safrinha crop conditions in nearly all areas. So, bearish sentiment dominates in the market for now. Soybean futures increased by more than 10 cents over the week ahead of the USDA's report, where analysts expect a lowered forecast for planted acres from a February evaluation, which was already more than 3 million acres lower compared to previous year. Meanwhile, the Brazilian Association of Vegetable Oil Industries decreased its forecast for Brazil's 24-25 soybean production. That added to the bullish sentiment. Moving to the shipping industry. Containerized freight index remained unchanged versus a week ago. Rates for container shipment from China to Europe and US continued decreasing, while routes from Europe and US to China increased on the contrary. So, on average, the index was stable. Market analysts expect slight price decrease in upcoming weeks, but looks like the rates stabilized from previous slipping. The Baltic Exchange Dry Index slightly corrected downwards. The Capesize market started the week on a firmer note, but gradually softened, as activity failed to gain momentum in both basins. For Panamax segment, the week, on the contrary, was solid, as both basins saw sizable gains. In Ultra Supramax segment, the week was mostly uneventful, with certain activity registered in South Atlantic and South Africa, which kept rates from sliding. In Handysize segment, the market has shown a mixed performance across the regions. In the continent and Mediterranean, there was a sense of stability, while in the South Atlantic and US Gulf market, fundamentals remained generally slow. Meanwhile, in Asia, the market was healthy, with a steady demand-supply balance, particularly in Southeast Asia. To sum up, urea price finally found support with Indian tender announcement. However, long shipping window until mid-May will not help to significantly rebound price level. Urea prices showed immediate uptick by $5-10 at all benchmarks across the globe, and more increase is anticipated this week. Nitrates prices in Europe started deteriorating at the end of the application season approaches. Sulfate price dropped last week amid slow demand and bearish trend in urea at the beginning of the week. Ammonia price for April contract at Tampa decreased by $25, demonstrating continuous supply length building both east and now also west of Suez. Phosphates prices were stable high due to persisting supply tightening and increasing cost of sulfur. European gas price stabilized after a jump last week, while US gas price remained largely unchanged. Agricultural commodities future prices corrected downwards for wheat and corn in the anticipation of USDA Plantix report, which is expected to show increased acreage. Container shipping costs stabilized at the level of past week, and activity in bulk shipping was relatively active, especially in Panamax and Handysize segments. So let's see what is next around the corner. But it will be already next week. Thank you for watching. Please subscribe to the channel, put like to this video, push the bell in order not to miss any updates, and see you soon.